Welcome, welcome everyone. So this will be one of the easiest panels here, I guess, because it's quite self-explanatory. You have the regulators, and you have the association, and you also have the business. So our panel is the real-world assets in Web3, innovations and challenges. So we will explore in this session the transformative potential real-world assets in Web3 ecosystem. Our expert panelists will dive into the cases, and we will also explore the regulatory roadmap associated with the real assets and on the blockchain. As I said, the panel is quite self-explanatory. We have two regulators. We have Elizabeth and George here, and also we have Sam and Steve. So that without further ado, I will start the questions, and we will hopefully have some interactive dialogue here. And the very first question will start with Sam and Steve, and feel free to jump in, whichever one's first. How do tokenized real-world assets compare to traditional assets in terms of liquidity and market access?
Thank you very much for the questions. I think we just heard from Mr. Root on the opening the keynote speech. We do see a lot of good opportunities coming out from the market, especially when comparing to like traditional long-only fund industry. For the last only 2 years, less than 2 years, we have seen a number of fund houses launching different type of tokenized funds in the market. I'm so glad also we have two or even more now licensed platforms in Hong Kong, VATP. And also thank you for the regulators, working with the industry, working with the different stakeholders to come up with rules and regulations. Because to us, it's better to know what we can do, what we cannot do before we proceed. I think, as a CIO, you know what I'm talking about. So in terms of the challenges and the opportunities, we do see there's a big development in this area. We have been in industry for the fund management for a long time. Liquidity is definitely one of the key issues in order to expand the market. We need to provide the liquidity to our investors so they feel comfortable. Like for example, I think it's no secret, you see how the market reacts in this couple of days in Hong Kong. We dropped almost more than 10% just today. So you can see if we don't have liquidity, how panicked the investor will be. So that's why in order to expand, we need to do more on the liquidity side. So from our perspective, it's good to see the liquidity. We have, I think also they had a keynote speech by Hong talking about 24/7. We want to see more players coming in place. They can develop the market better so that we know different stakeholders like service provider, custodian, TA side, okay, the technology can catch up so that the liquidity can be maintained at a certain level. And on top of that, I think on the assets, definitely more platforms, easy for people to do. So the secondary trading has to be in place. Okay, so that the investors will feel more comfortable. And also because nowadays the investors' mentality is so different now. Sometimes when they go home, they want to do their own personal trading. So if 24/7 is the value for the tokenized funds or crypto, you also make it easier for them to invest into. And then maybe I stop here first. And also the other thing is how easy we can provide the tokenization wrapper to start with for our traditional funds, for example. Also at the keynote speech, Hong talked about the 3 to 4 different fund houses already launched their money market fund or different fund in different jurisdictions. So I can see that if there's more clarity coming out for the industry, we know what type of assets, what type of wrapper we can utilize the tokenized products to tap on the existing user fund, for example. Then definitely you will create a higher liquidity. Thank you.
Thank you. Thank you for that, Sam. And Steve, do you have anything to add on the same?
So similarly, tokenizing real-world assets in a blockchain business point of view gives access to new capital. So crypto has about 2.5 trillion market cap as of this morning. And largely, this is new wealth that's generated. So this is a powerful access, a reserve of liquidity that RWAs can access by tokenizing their assets. A second is higher yield. So because actually Dr. Xiaofeng was explaining about flash loans yesterday, because of the technical advantage of blockchains, the cycle of lending and borrowing can be as short as 1 second in crypto. So higher efficiency generally means higher yield. And of course, we look forward to having guardrails and protection for users, especially from regulators. But in crypto point of view, these are two main access that tokenizing RWAs will provide.
Thank you. Thank you for that, Steve. And I want to go on in further on this, so we want to deep dive further. In recent years, obviously we want to do this with the regulators since we will use this as an opportunity. So this question goes to the regulators, and before that, in recent years there has been increasing interest in tokenization in the market. So in particular, intermediaries want to make sure the use of new technologies in providing solutions to their clients. So how do you describe the current regulatory landscape on this in Hong Kong? And what are the regulators' current priorities and planned regulatory approach regarding tokenization, obviously respecting the fact that you cannot disclose everything, but as much as you can disclose it. And I would like to start with whichever.
Okay, maybe I go first. Before answering your question, I just want to say that as you can see from our appearance today, it's not difficult to tell that who is the true innovator, right?
That is true.
So I'm still a regulator, you know, with tie and suit.
But
so
also, regulators also has to be innovative in a way, because it is a difficult industry, crypto industry. So I totally respect the fact that you guys are also very innovative too.
Thank you very much. So yeah, I think there's no doubt, and everyone should be well aware about the beauty of tokenization technology, such as 24/7, immutability, programmability, and atomic settlement, etc. You name it. So, but with all these benefits behind, I think the technology also comes along with some risks and challenges. I think as a central banking institutions, our critical role to play is to provide an anchor of safety and stability, and we need to take a very good balance between innovations and regulations, as well as security, privacy, etc. So on one hand, we don't want to stifle the development of the innovations. If we, sometimes I understand that the industry would like us to provide some clarity in terms of our expectation, guideline, rules, etc. But if we, provide too rigid guideline or regulations, then it will to a certain extent stifle the development of the innovations. But of course, we need also to take a good balance, such as in particular, we are very focused on, putting a very high importance to the consumer protections and investor protections. So over the years, we adopt a risk-based technology, neutral approach. So on one hand, we look at the intrinsic characteristics of the financial transactions or activity itself. On the other hand, we would like to let the industry to choose the most appropriate technology that they would think is appropriate. Quoting one of the principles we always mention is same activity, same risk, same regulations. So it's not our intention to provide any undue exemptions or requirements imposed to the market, but on the other hand, we would also like to the the end users, such as the consumers or investor, make sure they will not bear any unnecessary risks the protections that they need to safeguard. So. Two key challenges that I would like to share with you is one is the tokenizations. Although we see the benefits and characteristics of it, but the pathway of its adoption is still remain unclear to us. Meaning that the adoption is has still been inconsistent. To say that. So, I mean, none of us have a crystal ball in hand, but so therefore we would like to work with the industry to adopt more like a use case driven approach, just to make sure while we will not blindly just to adopt the technology, but on the other hand, make sure that there will be a sustainable use cases, and then it is commercially viable. Also, when we start adopting it and implement it, it can be grow at scale as well. So this is one very key challenges. And then the other one is we see that the technology used for its implementation is still very significantly. So the market, I can see from the market, the implementation approach is still quite fragmented. So I think it is one of the key factor that we would like to address is the interoperability. So I will talk about the project ensemble later on. I will elaborate a little bit more. So standardization is a key successful factor of the project. So I think it is very important to, first of all, to grow the market together. Let's bake the pie, make it big enough instead of starting to corner the market at the very beginning. So I'll stop there first. Thank you.
Anything to add, Elizabeth? Or no?
Right. So maybe I could talk a little bit about our tokenization journey. So what we've noticed, and I think what George has just mentioned, is the great potential that blockchain and all this new technology can bring to the financial markets. So what we observed was that if we know that there are so many potential benefits, why isn't the industry doing more experiments? Why isn't the industry adopting it more? So I think it goes back to what Sam mentioned, was that they wanted regulatory certainty. So they wanted to know whether they could do it, what could be done, and what could not be done. So in order to further unlock the potential of this new technology, and also to encourage traditional finance to really try and experiment and really adopt new technology, what we did was that we issued circulars to provide guidance to the industry. So essentially what we said was that you are actually allowed to do it. We've never said you're not allowed to do it. What you need to do is you need to observe the traditional securities laws if the product that you're tokenizing, the asset that you're tokenizing is a security. Otherwise, what you need to focus on is to address the new risks that arise from the use of the new technology. So that would be, for example, ownership risks and other technology risks. What happens if the blockchain is down, for example? So we issued this guidance, and what we've done, as George has also mentioned, is that we've maintained it to be really agnostic to the technology that you use. So this might answer Sam's question as to, is there a standard? We haven't set a standard, but we do hope to see that some standard will evolve through the experiments that traditional finance is undertaking. We haven't said that you have to use a particular blockchain, you can't use a particular blockchain, precisely because each blockchain has their benefits, has their cons. It is for the industry to really do the due diligence, to really choose what kind of technology they want to use, what kind of blockchain they want to use, and how they can support the whole ecosystem. So this is the guidance that we've been dishing out, and we hope that through giving more guidance, more certainty, more experiments will actually come out, and also real-life use cases, which, as George mentioned, is a challenge. We want to see, commercialization, real-life use cases really emerge and really form the backbone of our financial markets.
Excellent. I think on that moment, I will continue with a second question, because that highlights the unique interaction between regulators here in Hong Kong, and I have to compliment here both of you, because in most jurisdictions that I am aware of, there's not much of an interactive dialogue between the regulators. Everybody has their own mandate. There's not much of a synchronization. But here in Hong Kong, my initial experience is there is a lot of interaction, and that actually brings the success and makes it unique. So on that note, in 2024, HKMA launched Project Assemble, a groundbreaking initiative that brought together a diverse range of industry stakeholders, with the SFC co-leading tokenization initiatives for the asset management industry, and with the HKMA, including HashKey Group as a core member. Obviously, HashKey was always on the center of any new development. On that, I think I will continue with the same order with the regulator. Since we have you here, we'll make the best time out of it. So I will start with George. Could you share your motivations behind the HKMA's decision to initiate this project, and what significant milestones you have achieved since its launch?
Thank you, Chagri. Thank you for your compliment. It's always our pleasure to work with the industry together to co-develop and co-design the ecosystem. So to answer your question, first of all, is our motivation. So I think it is quite clear to us that given the rapid development of the tokenization technology in recent years, so we want to seize the opportunity that the digital assets bring along, as particularly the tokenizations of real-world assets and financial assets, etc. That's why the HKMA commenced the project ensemble last year in March, mainly our aim is to explore an innovative market infrastructure with the industry to facilitate a seamless interbank settlement using tokenized money with wholesale CBDC, central bank digital currency. So secondly, we would like to explore the domestic as well as cross-border use cases with the industry. As I mentioned earlier, I think identifying an impactful, useful, meaningful use cases is very important. We are not just doing the experiment for experiment. And then the last one would be to bring together some leading experts and industry pioneers together. Let's grow the market, bake the pie together before we start thinking about competition. So some major milestones that I can share with you, apart from we launched the project in March last year, and then we formed an architecture community with the industry, composing of members across a spectrum, including regulators. SFC has been one of our very key and important partner, and then we have some international organizations such as BISIH, some representative from the universities. They give us a lot of good input from the academic point of view. Also, of course, we have some local and international banks, tech giants. Also, HashKey is one of a very important partner. So. And then we work together, and then we collect all the inputs, particularly the requirements from the market about how should we start doing the experiment, how should we design and build our sandbox. And then after a couple of months, in August last year, we completed the building of the sandbox, and then start working very closely together with our 30 around 30 architecture community members, as well as industry pioneers, with some over 20 tokenization use cases. So these use cases cover 4 major themes, including fixed and income investment funds, liquidity management, green and sustainable finance, and trade and supply chain finance. Of course, the list can go longer and longer, but I think we still need to confine our scope, trying to identify some more common, impactful use cases. Then we will start doing some experiment on the sandbox. So apart from the local collaborations, we have also announced some cross-border collaboration last year with some overseas central banks, including Banque de France and the Central Bank of Brazil, as well as the Bank of Thailand. So we have started to work on some PVP experiments, connecting the financial infrastructure in 2 different jurisdictions. So just in parallel, of course, I think our focus will still be put on the domestic exploration first, but at the same time, we won't wait until everything is completed. We will in parallel start working with some cross-border jurisdictions, trying to identify some cross-border useful use cases in parallel. So riding on this milestone achieved by the project ensemble, I think we will continue to shape the industry standards, achieving the interoperability. I always have trouble, to pronounce this word, interoperability, as well as ensuring seamless integration with various forms of digital money, digital assets, as well as other financial infrastructure. So over to you. Thank you.
Thank you. Elizabeth, anything to add on this?
Right. So for the SFC, the motivation to participate in Project Ensemble was that we already provided regulatory certainty, clarity. So we could see that there was already a leg that was emerging, the tokenized assets leg. But to truly unlock the potential of blockchain, we need the other leg, the settlement leg, before we can actually, really reap the benefits that we're trying to reap. So that's why we were very motivated to participate in Project Ensemble, just to see how this could actually work. How could we actually, from start to finish, complete, a transaction in a tokenized asset with tokenized settlement, like tokenized money, tokenized deposits, for example. So this is a very important step that we think is would unlock the real potential that we really want to see, and it would also form, the building blocks for the infrastructure going forward as to how we deal with, orders, transactions, and settlement all the way through the life cycle of a product.
Absolutely. So I didn't forget the businesses and the associations here. So my next question, this will be our last, and we will end with hopefully a question for everyone at the end. That will be the interactive part of this panel. But before that, this goes both to Sam and Steve, and feel free to jump in whichever one of you wants to start first. And the question goes around asset tokenization is opening new possibilities. I think everybody agrees to that. How can companies capitalize on this trend to create innovative business models and solutions within the financial ecosystem?
So I think, first of all, I think the companies should tokenize everything they can within the law.
Yeah, I second
real
that.
estate, commodities, money market funds. George mentioned CBDC, but also it's tokenization of fiat currencies. So I think there is a huge amount of opportunity and excitement in the blockchain space and DeFi, and tokenization will give access to that. So that's the first thing. Second thing, from layer 1 blockchain foundation point of view, we should all be very patient and build every component of DeFi ecosystem in the most secure and efficient way as possible. Since RWAs are coming, we should be enterprise level to welcome this liquidity. Third, there's a new concept called PayFi. It's basically allowing idle money that is in a wallet, waiting to be used as a payment, and providing savings accounts, but based on blockchain. So this portion it's a new terminology that came out of the crypto industry, and it's being evolved. So how do we allow people to keep cryptocurrencies in the wallet, but not keep it idle, but give them yield in a understandable and manageable risk? So blockchain companies should focus on payments and how to link DeFi into payments, so that in this one app, people don't have only the ability to send and receive the asset, but also savings account, how to generate yield using the idle money.
Thank you. First of all, perhaps I want to echo what George and Lee said first. Also, your comment, Checker. I think in Hong Kong, definitely, the industry work very closely with regulators. I need to thank them for their understanding, cooperation, and openness when they prepare or send out any even circular draft. We talk to the industry whether it makes sense or not. When comparing to a number of the other regulators, some don't even talk to the industry. They probably stay in the room, lock the door, and think what they think will work. And it turned out to be a nightmare to the industry. So in Hong Kong, it's totally different ballgame. Okay, from my past 20 plus years working experience with the SFC, definitely, they always consult the industry, whether it works or not. Now, so when it comes to this main topic, tokenization, and also the new business, I will call it, okay, it's even more important because there's no previous example or experience we all can live with, and they don't even understand, we don't understand, we are all exploring together. So now going back to your question, I think, I agree with Steve. If possible, we should tokenize whatever we can. The main reason for that is always address regulators or even investors' demand, cost. Selling mutual funds, selling our what we call the user fund or Hong Kong domicile fund in the market, a lot of times, even the service provider, we want to minimize the cost, but there's so many parties involved. And different companies, different works require. But if we can tokenize any product like mutual fund or even the other funds, now also we read the article from Larry Fink from BlackRock, even talking about private asset, private equities, infra or real estate thing can also be tokenized. Think about those products. So if we can use the tokenization concept or process apply to different type of asset classes, we can also democratize, the products to a lower level. Not only the PI, not only the institutions, but also retail investor can get involved into. And once we have more participants, no doubt the liquidity will be there. And also we talked about this at the very beginning, liquidity and market access. So hopefully we can see the product range wider. And also the other thing we need to pay attention to is how we can bring the off-chain more to on-chain. At the moment, I think under the SFC requirement, we need to do both. So one day, hopefully soon, we can only do it on-chain so that you will minimize the cost and also make it easier for different service provider to work together. Because FA, TA, transfer agent, fund accounting, or those kind of things, if we can make the whole ecosystem on-chain, no doubt we can minimize the cost a lot. At the end of the day, it will be the investor, their benefit. More access, 24/7 is no doubt is one of the big demand we should implement for the tokenization. And also that's one key reason why we want to tokenize funds, because we need to provide market access to our investors. Thank you.
Thank you. Thank you for that. So now, without further ado, this is the last question of this panel, and it is going to be an interactive dialogue. We want to spend more time on it, more engagement on this. And I will be, in front of two regulators. Both Steve and Sam will be on the stage now, because we will be asking more about their wishes. So what I mean by that is, how do you think the tokenization market will look like in 3 to 5 years from now on? And how should the regulators continue to foster the growth of the tokenization as the industry develops new tokenization solutions? So what is your wish list from the regulators? That's going to be a tough question. Go ahead, Steve.
So we need RWAs. Crypto has a huge demand for these assets. But at the same time, we also, of course, want to be safe. So if there is regulatory oversight, framework, and even enforcement to ensure that RWAs are fully backed and are redeemable, this is probably the best wish we can have. And we have a bulletproof asset that is on-chain. That will be powerful. And second, George also mentioned programmability. So whatever restrictions that need to be put into the smart contracts can be. So I think as you communicate with the industry, you can also explain the features that's needed for you to feel comfortable about compliance. And we can build this new ecosystem together.
Yeah, I totally agree with Steve. Definitely, we do need to see more engagement, involvement with regulators. In 3 to 5 years' time, I can see the volume of tokenized funds and the overall tokenization concept will become very popular to the market. And there's a very good beginning in Hong Kong. I think in APAC, even the world, right? We are the leader in tokenization. So we should set a very good example to the rest of the world how we should handle RWA. And from the regulator point of view, no doubt, their job is to protect the investors. So we need to respect and fully cooperate. And in order to do that, we need to be more open and transparent to the regulators what we want to achieve. Look at the hash key has been here 18 months. All you have, perhaps, your company perhaps have meeting with them every week, okay, to communicate what should be done, what can be done. and explain to them. So you require both sides. Industry and regulator both understand both sides, so that at the end of the day, the investor can benefit. And then also I mentioned the previous question from the industry, even for the other mutual fund operators, we want to see tokenization comes in place because we want to compete. For example, not among ourselves, but different product like ETF. How like a mutual fund can also stay along to compete with ETF is to provide the same service but lower cost. Tokenization is definitely one of the key approaches, one key approach to assist, to support us to achieve the goal. So if we can apply tokenization across the board for all different type of asset classes, we can provide that kind of access to the investor to choose with the regulators, different type of requirements in. I'm sure they want to help us grow the industry. They don't want to kill us, otherwise we won't be here today. So that's why it's our job to provide, I won't say education, but more sharing, more information, so that they feel comfortable. I'm sure they want to let us do what we want within the framework. And as soon as the framework is for the investor protection, they should be okay.
I mean, I have to echo those comments. I think I agree, and we as the industry have to assist the regulators too, because it's not always asking them a yes or no question, because most of the time it is not a yes or no question. It is more complicated than that. So we as the industry have to explain what we are planning to do in as transparent as possible, and walk them through on the products that we are developing, on the new initiatives that we are taking, and engage the regulators even before we start designing those, so that the regulators' job can be easier a little bit. So do you want anything to add on that?
Yeah, thank you. Yeah, this is, just want to echo everyone keep saying that our partnership is very important. Like we always say, the triple P, public-private partnership. I think both the private sector and public sector have to work very closely together to make this a success. So yeah, you asked about what do we see in 3 to 5 years. This is a very tough question indeed, and apology that I don't have an exact answer for this. Technology keep evolving very rapidly. We don't have a crystal ball. I mean, the future or the successfulness of tokenization will very much hinge on a couple of factors, such as the market trend, the technological evolvement, commercial viability, and also regulatory changes, etc. So to me, the future is still a bit uncertain, although the technology is very promising. And I do see demand is there. Everyone is have a high expectation to this. So let's work together and see whether we can make it a success. What's important to me is I think everyone should have a very open mind, forward-looking, and exploratory mindset to drive the innovations. Also leveraging on collaborations across various sectors as well as across border. Take regulated digital money as an example. As a central banking institutions, we don't have any particular preference or inclination to any one of the digital money, such as CBDC, tokenized deposits, or stablecoin. That's why in Hong Kong we have multiple projects supporting various fronts. For CBDC or EHKD, we are running a pilot program to identify whether there will be any useful use case for issuing CBDC to retails and corporates. And then on stablecoin, we are undergoing a legislation regime. So very soon, I think Hong Kong will have the first batch of stablecoin issuer licensee. And also tokenized deposits for banks. They are working very closely with us under the project ensemble. So I think all this demonstrate a very good example that we are very open-minded, and they all can coexist, and it's not necessary to exclude any one of them. We are happy to see all of them will grow in the future. So while as a central banker, we may not be a good innovator, but I promise you we'll be a very good facilitator as well as explorer. So we will see and work very closely with the market participants and see what we can go do it together in the future. Thank you.
Thank you. And that's, I think, as the industry, that's the most we could ask for. So, Elizabeth, please, closing remarks on this comes from you.
Right. So we will definitely continue with our partnership with the industry. As Sam mentioned, we always do consult the industry before we actually, publish any initiatives. For example, the staking circular this morning that we published, it was actually a few months before that we already started on this journey. So going forward, what do I see in relation to 3 to 5 years? I actually think, I'm thinking a little bit out of the box, I don't think we will actually be focusing on tokenization. Why do I say that? It's because I think we will be using new technology. It will become infrastructure. Is it definitely tokenization? Is it definitely blockchain? I can't be sure. But it's definitely new technology, and we would be agnostic as long as it can, reap the benefits that we want to see. It actually brings value to investors. It brings value to the industry. And I think it will be infrastructure that is so good that we don't even need to talk about it. We don't have to tell people, this is a tokenized fund. You should buy a tokenized fund. That's not the way it should be done. It's really the other way around. We look at the pain points. We look at what we want to solve that is currently, a sticking point in the industry. Is blockchain, is any other technology the answer? And then we implement it. And that's what I think we are moving towards that direction. I think with Project Ensemble, we're looking at commercialization, real-life use cases. This is all the right way to do it, rather than just saying that you have to use this technology. This is the only way. You have to sell tokenized funds. That's not the way we should be doing it. But rather, we really need to look carefully at the technology. What technology do we want to use? How can we build it into our infrastructure and make it into the new infrastructure? I think when we talk about tokenization, there has been a lot of focus on atomic settlement. Maybe before we deal with atomic settlement, we deal with the middle office issues first. So in funds, for example, we know that there's so many different parties involved. Would technology, at least reduce the amount of work the different parties need to do? Would it help them communicate better and make the whole operational flow faster, more efficient? We could also look at, collateral management and reconciliations. Can it be done quicker with this technology so that we move to faster settlement, not because it's atomic, but because all the other processes leading up to settlement is dealt with more efficiently. So I think this is what we're moving towards, and we will definitely be seeing it as new infrastructure in the next 3 to 5 years.
Definitely, Elizabeth. Thank you for that. And I think you have something to add, Steve. Please go ahead.
I noticed we have a few minutes, so I wanted to ask one particular question to the panelists. I'm just curious how you see the KYC and requirements in the secondary market would work for RWAs. So if we look at stablecoins, I think many regulators are taking the approach where they KYC on and off ramp, but they let the secondary market just be flexible in the DeFi ecosystem as of today. But should the industry be expecting something similar, or whether you have a different view on that?
So that's a hard question. Please go ahead.
I think from the SFC's perspective, as and when there are more entities that are regulated, and what we're seeing is that there are more entities that need to be regulated in all jurisdictions that we're looking at, and the same could be said about Hong Kong. So we're looking at an OTC regime for virtual assets. We're looking for a custody regime for virtual assets. So I think as we go along this path, there will be a lot more intermediaries that are actually involved. They're regulated, and once they're regulated, we have the KYC requirements that we would impose on them, anti-money laundering, all that would go part and parcel of the whole ecosystem. Of course, there would still be probably P2P transfers, but we can also envisage that more and more assets might be custodied with a regulated custodian, for example. So if they're already custodied with a regulated custodian, again, you would have the ongoing KYC, ongoing customer due diligence that would follow with a regulated entity. So I think this is where we're moving towards. We're seeing that globally, this is also the path that each regulator is taking.
Definitely, definitely. And just to add to that very briefly is also the products, the third-party products, the controls, the third-party controls, the KYC verification, all those tools needs to evolve too. Or or the industry leaders has to build their own internal tools to also assist, to mitigate the risk. So as the newest comer to Hong Kong, I have to say one more time that I will repeat myself, but I moderated these type of events across the world for different organizations. I never seen in my life two regulators on the same stage, and that is unique. That what makes Hong Kong unique, and I think that makes me also excited for the future. I want to thank for all the panelists here. Thank you for every one of you. And there are some closing remarks from George.
If I may, I will just use 5 seconds to conclude our session.
Sure.
I just want to quote our slogan of our project ensemble: "Let's tokenizing together today and tomorrow."
Yeah, definitely. Thank you, everyone, and we've been perfect.